Hi everybody, this is Sean Overton with OneStepRemove.com, and in this video I have Peter Brennan from Physic.ie. Peter is an independent money manager, but the unique thing about him is he started out like most of the viewers out there, where he trades his own independent forex account, and now he's wound up as an independent money manager. So Peter, thanks for joining us.
Yeah, my pleasure, Sean.
And Peter has one of the more interesting backgrounds of how he wound up trading forex. How did you get started?
Well, my background is engineering, and I live in Ireland, and most of my career worked for American high-tech companies, Hewlett-Packard, Intel, Seagate Technology. And a friend of mine got involved in an Israeli startup company called Tradency, which was started by a couple of Israeli guys.
Yeah, that's one of the bigger signal following services.
Pretty big now. They've got something like 160,000 retail clients.
I would say that's pretty big.
It's pretty big. Japan is the main market. But basically what happened was they were offered a lot of money around 2006 by a venture capital company. But there was a lot of tough conditions on that they weren't really happy with. So what I did was I approached them and said, look, I'll give you X amount, a lot less than the venture capital companies, but I won't have any conditions on it, so it'll be a lot less work. So they agreed to that, and I sort of got involved in forex then, and I started trading.
You had no forex experience when you invested?
No, not at that point. At that point I dabbled in stocks, and I dabbled in other sort of software companies.
Okay.
I was still working as an engineer at that stage, but then I got involved in currency trading specifically, and it was something. It's quite tough to do, as you know. It's a lot tougher than I expected.
Yes.
But it's a nut I wanted to crack. So I set myself that challenge of learning the business, and I was also very attracted by a lot of the advantages of business. Now you've got personal freedom. Right. You can live wherever you choose. You've got infinite upside. You know, in many ways, it's the perfect business model. You know, you've no inventory. You've no customers really. Yeah, you can just do it by yourself. So I started currency trading, and I've been doing that full time now for about 5 or 6 years.
And when you started, you said that it was challenging.
Yeah, I think like every retailer, I was pretty naive when I started.
Sure. About
how difficult it was going to be, and there's been a lot of epiphanies along the way. And really, I mean, I know before the interview, one of the things you mentioned was you wanted me to talk about how long it took me to learn how to trade, and what I would say to that is, you know, it's not, you don't just say, well, in 6 months' time, I'm going to be a trader. I think what happens is a development process.
Sure.
And you have to have a lot of hard knocks along the way to learn the business.
Okay.
And, you know, I would compare it to a sport. It's a bit like, say, golf. Somebody can tell you what you need to do, how you need to hit the swing. But actually doing it is a completely different skill.
It is.
And execution is very tough.
Okay.
Even if you know what you should be doing, it's very tough to do it.
Can you give us an example of where you graduated from the School of Hard Knocks?
Well, I think every trader goes through losing periods and periods of big drawdown, periods of where you get into the hope cycle that you put on a trade and it goes against you, and you do things like you take off your stop and
right.
You hope it comes back. And the problem with that is the market's very good at getting you to adopt those techniques whereby they're going to let you off the hook, say 90 times out of 100, but it's those 10 times out of 100 when the price doesn't come back and it wipes out half your trading account.
That's a problem.
So what the market does is it lures you into these high success rate techniques.
Sure.
And it teaches you how to trade badly by giving you validation when you make the wrong decision.
So was that the process you went through? You're attracted to winning all the time, yeah. And it works until it doesn't.
Exactly.
Right.
Yeah. And I suffer from what a lot of traders suffer from. You know, every trade has to be a winner. And when you put on a losing trade, even though you know theoretically that's part of the process is having losing trades, emotionally it's very difficult to accept that. You want every trade to be a winner.
Yeah. Well, you're responsible, right? You're the one pulling the trigger, so it's your fault.
Exactly.
Yeah, it's hard.
So it's really a lot of trading. I think the most important part of trading is self-discipline. You've really got to be a really disciplined guy. You've got to do the hard thing.
Right.
You've got to take losses when you need to take the losses. You've got to. Most of the strategies out there are going to lose over long term. You probably, we call them negative skew strategies, right? Strategies that will work for a while, and then the market's like a leopard, it keeps changing its spots. So these strategies suck you in, they work for 6 months, a year, you're making money, like a lot of the semi-martingale algos, for example, you're making money, then suddenly the market starts trending, you start losing, you blow up your account, a whole year's worth of profits is gone, and losses on top.
Right.
So the market's always sucking you into these losing strategies, and you really have to go through these epiphanies of, I'm not going to use these losing strategies, and I'm going to use things that work in the long term.
So when you started out and you were just basically flubbing through the account and you're doing high win strategies, what did that look like, and where was the point where you started following something that was more of a defined plan? What was that process for you?
I can't give you definite goalposts where I said I did this for 6 months and then I realised this. I think it's been like everything, you get better over time if you stick at it and if you're resilient and if you're persistent. And right now what I've done is I've refined my trading down to 4 specific setups.
Okay.
And I really need to train myself that unless I see that, I'm not going to take it. The other thing I've learned is to keep things simple. So, for example, if you have a risk-reward ratio of 2 to 1, and you can get a hit rate on the trades of 50%, you make plenty of money.
That's a home run strategy.
But it's so simple, but we don't do it. It's like the simple thing works. But somebody said to me once, one trader said to me once, trading is like being on a diet. Everyone knows what you need to do to lose weight, right? But only something like 2% of people stick to a diet over the course of a year.
Sure.
And trading is the same. I can sit you down, or I can tell you, this is what works, and this is how you make money.
Right.
But what I found is doing it is a completely different thing.
So did you ever try something as generic as a moving average cross or a MACD cross?
I think I learned really quickly that almost all the stuff sold to the public like that is nonsense.
Okay.
Yeah.
Okay.
And almost all the training out there that's sold over the internet is nonsense.
Sure.
And actually I have some experiences to share with the viewers on that. I remember I went to see one guy who was training, and I looked at his material and I said to him, none of that stuff works. I mean, anybody who's using techniques like that's going to lose money. And his comment to me was, well, he knows that, but he's selling dreams.
Okay. Well, applause for honesty, I guess.
Well, it was honest to me, but he wasn't being honest to the suckers who he's selling the courses to.
Yeah, well, that's unfortunately common.
Unfortunately now, the way I am now, I have to confess I'm quite cynical at this stage. When I meet a trader,
I've never met a trader that's sunny and optimistic all the time. Usually it's, I've been around the block, got punched in the face for a couple years.
Yeah, well, it's not an easy business, but now what I do is when somebody tells me they're a trader, I always ask to see some evidence of performance. Okay. Because my experience is that's very rare.
Right.
Successful traders. I don't know, what's your experience, Sean?
Well, it's a teeny handful of traders that actually make money. It's you hear people on the internet talking about 5%, 2% are people that make money. Yeah.
So believe it or not, that's true in other industries as well. The tech industry, very few companies survive and make money. Yeah. I mean, for example, I worked in the disk drive business for a while. There's been over 100 disk drive companies in the last 25 years. Okay. And now there's about 4. Right. And only one of them makes money. Okay. So, and in Nature 2, I've studied this in Nature. Nature 2, something like, I heard a statistic once, I was on a course at Jersey Zoo, and I heard a statistic that about 90% of surviving chicks are reared by 10% of the parents among small birds. Okay. Yeah. And while we're on the subject now, I also read another more macabre statistic. They did an analysis of the fighting at Stalingrad, and they found about 1% of the Russian soldiers did all the killing of the Germans. Yeah, it's pretty macabre. Yeah. It's pretty macabre, but again, it's like trading. 1% of the traders make all the money. Right. Yeah, that's true. It's true. It's whatever. Those people who are special, who've got some special skills, have got some execution ability that the rest of us don't have, and I'm trying to get there. Sure. So that statistic, it might shock people to hear that very few traders are successful. Sure. But it's also true in other businesses and indeed in nature. So it's actually not unusual.
So when you were in the much bigger group of everybody that's not doing well, how did you get to the point where you felt like you had a strategy? Are you following mechanical rules? Did you take somebody's course? Did you read a bunch of books?
Well, I think I would put it down as having epiphanies along the way, and one of the epiphanies would be that the markets are largely random most of the time. And you can't make money out of randomness. But within that randomness, you do have what's called trader effects. And trader effects, for example, is when the market adopts a different bias. And really what it becomes is you've got to get good at recognizing these trader effects, and that then allows you to come up with those risk-reward trades I talked about. So, for example, if a market adopts a bias, like an example of a trader effect would be the Japanese central bank announced earlier this year that it was going to basically devalue the yen, massively devalue the yen. So then the traders adopted a bias on the yen that they were going to sell the yen. Now the problem with that is, even if you know that the market's has got a negative bias towards the yen, where do you get in? Because you can still lose. Because the market can still stop you out and then make its move. So what you need then is a strategy whereby you can exploit that effect. So if you, for example, can recognize a buyer-sell extreme on a chart, you know that at that specific point traders are buying support. So the fundamentals are on your side, and then you use technicals to find the right risk-reward ratios on the trades.
Okay, and since you're using fundamentals, what is your time frame for a typical trade?
I'm a swing trader, so my time frames are typically on the hourly and 4-hourly chart. So I would say between 1 and 2 to 3 days is typically my time frame.
Okay, so you do maybe a handful of trades every week.
Yeah, I probably, like a lot of people, I mean one of my weaknesses is I overtrade. Because one of the things you got to get good at, that I'm not good at, is sitting there doing nothing. Because the money's made in the waiting. It's famous Jesse Livermore quote. And I'm not good at sitting there. You really have to train your mind as a trader that when you're sitting there and there's nothing happening, you are actually working by watching the market. But as we were all brought up in school, and we were told you have to be studying all the time, you have to be working all the time, you have to be pushing all the time. So I'm actually not good at that, so I need to get better at that. Again, that comes back to a point I was making earlier. Knowing what to do and doing it are two different things. So I've got to get a lot better at my execution. But that's a process, and I am doing that. I am getting better and better all the time, and I can feel that in myself. I can feel myself developing, and my confidence level at this stage is also quite high, and that partly comes as a result of the fact that you've been through the learning mistakes, and you know not what to do, and you know what works after a while. That's the road I'm on. And
when we were talking initially, you described yourself as trading a system, but it's discretionary. That's one of the more interesting descriptions I've heard. So what does that mean?
Well, basically, my approach is to use a combination of fundamentals and technicals. That's where the discretionary part comes in. And the system part comes in then, whereby I need to have very specific things before I enter the market, and I also need to have specific risk-reward ratio. So, for example, and then basically the game becomes, it's like the casino. You don't know which trade's going to work, but the casino knows it has an edge over time. So then if you have a specific set of entry rules, and your risk-reward ratio is 2 to 1, 3 to 1, or sometimes I use 5 to 1, then I know that if I get 40% of those right, I'm going to make money. So it's simple, but it's powerful, and it will work if I execute it correctly. And usually where I do go wrong is when I get weak on the execution, which happens at times.
Well, it happens to everybody I've ever talked to.
Well, again, it's like the diet analogy. You know you're not supposed to eat this, but you do it. Or people who maybe abuse substances. They know it's bad for them and they still do it. Trading self-discipline and preparation and planning is the other thing I would say that I've learned along the way. I'm not a natural planner. I'm more of an impulsive character by nature, but I've really had to beat it into myself. Good preparation and good planning are absolutely essential, and are really what separates the winners from the losers. It's how you get into that 1 or 2% group of people who can do this. Your preparation, your planning, they all feed into your execution. good execution.
Okay, and I know that since you are trading a combination of fundamentals and technicals with specific intervals, if you told everybody your strategy and you laid it all on the table, would they be able to use it?
Absolutely not.
Okay.
And the reason is because it comes back to what I said, like golf. I mean, if I was Tiger Woods, I could tell you how I swing. But doing it, I mean, golf is not a secret, Or another good analogy I like to use is boxing.
Okay.
If I was a professional boxer, I could tell you how I box and how to throw a punch. But chances are, if you got in the ring with another professional boxer, you're not going to last long. Okay.
Right.
And trading's the same. I think you have to go through the pain of the mistakes to really learn the business. And another side of that, I heard a story once as well. People suffer from what's called anchor bias. I heard a story once where a guy said to these traders...
You said anchor bias?
Anchor bias, yeah.
Okay.
I heard a story once where there was a guy training in New York, and he said to these stock traders, how much did you make last year? Or how much do you make a month? And the guys were saying, well, last year I made 50% or I made 20%. And he said, okay, tomorrow then I want you to come in and bring in your brokerage accounts, and we'll go through and see what you really made. And when the guys brought in all the brokerage accounts the next day, most of them had made a loss.
Really?
Yes.
Okay.
And then he said, well, where are you getting these 20% or 5% a month figures from if you've made a loss? And it turned out that what they do is they looked at a winning period, or they looked at a winning month, and that became their anchor for telling people.
Interesting. So they're lying without really choosing to lie?
Yes, but one of my strategies now, one of the things is now having clients is I report my performance, as you know, in the newsletter every week.
Sure.
And it's also independently verified on my FX book. So I actually can't do that now. I actually have to face the music when I'm not doing well. And actually I find that's good for me.
Okay.
Because that really keeps me disciplined. Knowing that the clients are checking the accounts every day.
Right.
They're checking it every week, and they're certainly checking it every month. Actually, if you have a bad month, they're getting upset even over one bad month. So knowing that, it really makes you say to yourself, well, look, I can't afford to start pushing things under the carpet.
So when you're trading and you're managing people's money, yes, you're your own boss, but not really. Like, you do have bosses that are watching your performance.
Well, there are some people who are watching it constantly.
Okay.
Which is a bit unnerving, but
Sure.
The upside of that is that you really have to be disciplined. You can't be like these guys with the anchor bias, telling people that you're making 50% a year and you've just lost 20 when you analyze the brokerage account, which apparently is what a lot of traders are doing.
Okay.
Especially retail traders. And a broker told me too, what a lot of retail traders do is they blow up their account and then they reload it. And they might have a good few months, and people ask them how they're doing. They obviously tell them what the reloaded account was.
Sure.
They don't tell them, well, I've just blown up the account several times. So, and that there's various words for the biases around those: recency bias, and the anchor bias, and the selection bias.
So when you were doing retail trading, you're just trading for yourself, kind of a hobby. You're still an engineer.
Yeah.
At what point did you have the confidence, and what was the process of going pro?
Well, some of the background to that is, I worked in engineering for a long time. And anybody who's done that knows that engineering, it's a young man's game. It's very tough work. I worked in a computer fab. It's a 12-hour day job, and there's a lot of timeline pressures. And also, you get paid a salary every month, and after a while, there's no upside. So I actually got bored with it, to be honest. And I guess, like a lot of people, the market's a lure of easy money, aren't they?
Yes, yeah. Well, any idiot can do it. You push the button and you've got a 50-50 shot.
And you sort of, you can make millions, and you can move to a resort, and you can tell everybody you're Gordon Gekko, and I'm sure you've been there. It's a pretty common fantasy.
Yeah, everybody's got the idea that their life's going to change at some point. They're thinking, oh, I'm on a big trade and my life's about to change. I don't know anybody that didn't at least have that dream at some point. Yeah. Now, everybody's got a different period where they hold on to it, but everybody's been there.
Yeah, it's a lure of easy money, I guess. So I really got bored of engineering, and I decided. I remember reading a book by Andrew Grove called "Only the Paranoid Survive," and one of the points he makes in the book, he said, the modern world is so competitive that if you're doing something and you don't commit to it full time and give it 100%, it won't work.
Okay.
So I decided that if I was, working 12 hours a day as an engineer and coming home and trying to trade, I was wasting my time. So I decided, and also at that stage I would put the money into Tradency.
Okay.
And Tradency was looking pretty good at that stage, and it's been a bit of a roller coaster ride since then, but it looked like I was going to do pretty well out of that company. So I decided basically to go pro, and but I started off with the stock market. I started trading stocks initially, and spread betting, because that's tax free in the British Isles. And then I gravitated towards forex for a different reason. So it's a long story. We probably don't want to get into it now, but forex has a lot of advantages. We won't get into them in this video. But one of the advantages is it's easier to trade clients' money as well, because you can just electronically link the MT4 accounts. And I learned some of this stuff from the Zulu Tradencies of the world, and you can just basically gravitate towards forex over time.
And how long were you trading before you traded other people's money?
I would say about 4 years.
Okay.
Yeah.
And how long have you been managing money?
In the current format with Physic, because I had a couple of private guys who just asked me to do it a couple of years ago, so that's been going for 2 or 3 years, and then with Physic about a year.
Okay.
About a year.
So when you've made the decision, okay, I'm tired of my engineering job, I'm going ho trading, I'm doing okay.
Yeah.
What did you do to go get clients? How are you getting your name out there?
Well, basically, I started trading my own money, and then what would happen was people would know I'm a trader, and I would get offered money. And initially, I used to say no, because I knew that would be a lot of hassle. But then I started with one guy, and then I added another guy, and then I went through patchy periods with that. To be honest, it wasn't all a success, but it wasn't a disaster either. And then I decided, I met a Russian guy who was a programmer, and we decided we'd set up a company together and explore algos, and that was 2 or 3 years ago. But then, so that's when I set up Physic initially, and that was the original trust of the company. But then he got offered a job in London, and it was more of a sure thing than what he was doing with me, so he took the job in London. So then I decided to take Physic in a different direction, and I would start trading people's account through MT4 platform. They would just link to my account and follow me, basically. Okay. And that's been going on about a year now. Initially started pretty successfully. Went off the rails a little bit this summer, the markets, because my strategy, I was using a basket trend strategy, and that stopped working. And I've had to refine my strategy since.
So how do you deal with that? Like you're trading, you're doing well, you've built up this expertise, and then this happens all the time. The strategy stops working.
Well, I guess what the tech industry is the same. I mean, look at what Apple and Samsung done to Nokia and Motorola in the mobile phone business. They had a great business. They were the leaders in their market. Apple came in and took it away, and Samsung took it away. And you've got to understand this is part of the process of trading, that if you've got a strategy that works today, it's not going to work tomorrow. So there's a story of, in Alice in Wonderland, of the Red Queen, who, looking in the mirror, she has to keep running faster and faster to stay in the same place. Okay. And basically this is the environment we live in. The market is changing all the time. You've got to understand that process, and you've got to move with it.
So when you're in that patchy period, obviously you know that you're in a patchy period because losses are mounting. So at what point? At what point do you realize that this isn't something normal?
Again, I'd find it very difficult to say something specific like after a week or after a month or something. Again, I think that's a process. But one of the things I've done lately is I've switched my strategy to that simpler. I was using a more complicated strategy at the start of the year, but one of the things I've realised is that simple is better. So now I'm back to a strategy I used to trade a few years ago, which did better actually, which is the very simple hit rate versus risk reward ratio is my strategy.
So you just have
I want a hit rate of 50% at a risk reward ratio 1 to 1, 2 to 1, 5 to 1, 5 to 1's about as max I go.
Okay.
And my focus now is I want to try and get a minimum hit rate of 50% with favourable risk-reward ratio.
Okay.
And then I know if I do X number of trades a month, I can reach my target, which is 5% a month.
Okay. So you just went through the process of looking at the changes that had occurred. You start modifying the strategy?
Yeah, you modify the strategy. I was using, at the start of the year when the yen was trading, I was using a basket strategy, which I won't get into the details now, but that's some very nice things about that is that you don't tend to have losing periods. I mean, one of the difficulties of working with retail clients I find is they're really intolerant to losses.
Right.
Really intolerant. I mean, I've got clients who think every day should be a winner.
Okay.
Actually, every trade should be a winner.
Right.
You know, I mean, I get people asking me for guarantees, which is a bit silly because in the markets you get paid for taking the risk.
Right.
I mean, and that's why they would get paid, but they think they come along and it's free money and there's no risk and every trade's a winner.
So how do you manage those expectations?
Well, you've probably read my newsletter, and
Yes.
I write a weekly newsletter, and I report performance, and I say what's going on and what I'm looking for. And I also have a trading perspective in there every week where I talk about what the analogies are with sports and the mistakes traders make. And I try to set realistic expectations in the newsletter. And I found most of the clients to be really good, very tolerant once you explain stuff with them. I think where you get into trouble with clients, a lot of money managers fall into this trap. They try and hide things, and they make excuses. They don't tell people the real reason for the drawdown, the real reason for the bad performance. Most clients are understanding, but then again, I do send all the clients a questionnaire. I try and avoid sort of the crazy people.
Well, you know, hopefully that's not you.
Well, you know when somebody sends you an email saying, "Do you guarantee results?"
Yeah, of course. That's a you don't belong here email.
Well, you know what? You know, what I do is write back to them and say, well, you have to understand that the market pays you for taking the risk. That's why you get paid as a trader.
Sure.
Otherwise, it would be free money. If there was no risk and you just, you know, it'd be like walking into a bookie saying, if I back this horse, do I get my money back? You know.
Yeah, it's a silly question.
Why would the bookie let you back the horse? You know, it's a silly question. But I get it all the time, and I actually remember speaking to Janice, another trading outfit in Germany, and he said he has some Turkish guy who calls him every month saying if only he'll guarantee the performance, he'll raise X amount for him. And every month he tells this guy, no guarantees. And the guy calls him every month saying, I have 10 million, just guarantee it.
That's a trail of tears waiting to happen.
Well, you know, those are clients. I mean, the reason I send clients a questionnaire, I mean, my target client base is people who've traded before.
Okay.
And I ask people this question on the questionnaire: have you traded before? What were your markets? Do you know how well you did? And most of the people who come to me have traded before.
Okay.
And that's a big advantage.
Yeah.
And the newsletter, I think the newsletter, a lot of the clients tell me they really enjoy reading the newsletter every week. And one of the reasons too, because you know there's thousands of newsletters out there and most people don't bother even reading them. But when you report performance in the newsletter and people's money's on the line, they really do read the newsletter. Yeah,
well, just, you know, honest confession. When I get your newsletter, first thing I do is scroll down and I look, because you always put it right in the middle. So I scroll right down to the middle.
Well, Peter did this. First paragraph.
Yeah, so I go look, and that's the first thing.
That's the first thing you look at.
Yeah, I'm always curious. How'd Peter do this week?
Exactly, because I think if I was just writing a newsletter like all the other generic newsletters out there, nobody would even read it.
Yeah.
So I think and the other thing I want to do, Sean, that's important to me is I don't have the stomach for conning people.
Right. Good for you, Peter.
Well, as you know, it's an industry of charlatans.
Yeah, it is. That's absolutely the truth.
The amount of people out there who are selling training, for example, and they have no idea how to trade. And they're just repackaging stuff that's available for free on the internet. And the amount of people out there who claim they can trade but who can actually do it is tiny as well. So when I got into the business, when I was writing the newsletter, when I was putting it out there, you know, I wanted to try and be an honest guy, because this is a huge opportunity as well. If you are honest and you have real performance, then there's almost nobody like you out there. It's really hard to find people like that.
It is.
So for people coming, I see the opportunity side of the business as well, that, you know, you can build your build your name and build your reputation if you've got the performance and you're honest about it. And then you can also build up trust over time, which is very important.
Yeah, and I think we're running out of time, but I wanted to thank you for joining us. And if you're interested in getting Peter's newsletter, you can find it at physic.ie. That's FISIC.ie.
And it's free.
And it's free.
Yeah.
So, Peter, thanks again for joining us.
My pleasure, Sean.
Thank you for watching.